Hello everyone, how are we doing? So this is just a brief update for December of how the portfolio has gone. It's gone very well this month, as we can see here in the chart. So these are the two familiar charts, the portfolio gain in market value and the dividends received. So we can see from the last update, which was around the end of November, we had roughly about 8,200. Since then, we've peaked up to 10,388 and currently on about 10,290, and that's only with £500 deposits, which has been quite nice. We'll go into the holdings in a second. So we've received totally this year so far $40.99 in dividends. We can see here that September was the best month so far with 11.76 and currently about 8.30 with a couple big dividends to come in this month, so hopefully we can beat the high in September. So going to the holdings here in market value, we can see that Aviva, and I've added a large amount into, as well as Intel and 360 Digitech, along with AMS. AMS seems to have a very good path for growth in revenue. I'm not sure. I'll monitor the earnings coming from this, as they have quite high costs in research and development and operating activities. So going on to the disposals of the last month, we can see here. So this is going back. To the start. So I managed to offload mainly most of my smaller holdings. I'm trying to condense them into larger amounts rather than having 1% of the portfolio in a holding. So I managed to offload A2A, which is the Italian utility company. Coca-Cola Enterprises, I regret this. I think I got it at a very good price, and it's currently sat around 47, and it's a long-term holding, so I regret selling this one. I shouldn't have bought more into it, but I definitely should have held it. BXP, I wanted to free up some of the capital. I don't really know the company, so I thought I was going to get rid of it. Same with LTC. And NatWest and Lloyds, they had good returns. I'd have liked to have held them, but they just had such a small amount invested that I didn't think it's worth having that little to keep up to date with the company. So keep checking it for the $50. So we've had a return of $175, which is 2% of the portfolio, but I'm not after the short term. Like I said earlier, I want to try and keep holdings as long as I can. So we've had $509 in, starting value of $8,058, and we are currently at 10,278. So some of the new holdings, as I discussed, Aviva, Galliford Try. I need to add more into that. That seems a very good company. They're currently selling below their cash value. Their market cap is below their cash value on hand, which is a very good sign. So I'll be purchasing more of that. Intel, I'm very bullish on Intel when everyone else isn't. They've all gone to AMD. I'll go into in a second the statistics for this. QFin, added a couple more just because the prospects are good for this company. And like I said, AMS, and some new additions altogether is Kellogg's. They just sell. I bought it at a good price, I believe. They've got a good brand identity. Everyone knows what Kellogg's is. They've got a Morningstar brand, which shows like fake meat. It's called Incognito. And Northrop Grumman, NOC here, which I'll be buying more of. They're a very good company. They do a lot of space exploration and missile defense for the US government, and they're also launching the James Webb Space Telescope into orbit soon. So it's just a good company of good prospects, which we'll run through in a second. So this is the AMD Intel. So this is just your 7 basic pricing valuation statistics here. So we can see they're all red and they're all very, very high. Compare this. The return on equity, however, is quite good, 27. But they're just very, very high. It's just nowhere near the. If you look at the market cap, it's 116 billion. They only made 866 million in income, giving that PE of 135. Intel, on the other hand, has been hammered by the increased time on their 7nm chips, but the Intel roadmap is aiming to get, I think, sub 3nm by the end of 2030, along with their R&D into quantum computing. So I think Intel It is worth buying at this price. We can see here current PE of 9.93, forward PE of 11.12. So even given their reduced potential earnings, the PE is still very good. Very good cash flow in this company, as we can see. They've got, just find it here, cash flow per share is 4.4. So you get nearly 10% of your share is their value in cash. Return on assets is quite high. Return on equity is 1% higher than AMD's, but they just have good prospects. I think this is a good price to buy it at. Moving on to Northrop Grumman, one of the other purchases I bought. It's got a good forward PE. The current PE is okay, 20. It's not amazing, but they've got some good forecasted growth and a large amount of government contracts booked in, which is quite a steady revenue stream. And at this price, I think it's definitely not expensive, with good growth in the future. So that's why I'll be buying that. It won't be the largest holding in the portfolio, but it's something to consider. Kellogg's has an extremely high return on equity. This is because it doesn't take too much more to carry on producing. My main concern with Kellogg's was the fact that you can get store brand cereals. So when I was analysing this, and what stopped me putting much money in was the fact I only had Aldi's own brand. And I can imagine that a lot of people have just, you're not too loyal to your cornflakes, so you're not going to buy Kellogg's for an extra quid when you can buy it cheaper from Aldi for a quid less. The peg is very high, so that is unfortunate. That means that the growth isn't there in the company. However, the PE is good, and it seems to release sort of relatively consistent earnings, like I said. So I think it's one to buy at this price. And we'll show the chart here. So I don't want to do sort of just technical, but I think just given this price and given the brand, it is a relatively good buy. I won't be buying any more if it increases too much. So that is the portfolio. We've had total return of 1.82k. So currency gains, which is where the pound and the dollar interchange from my local currency to the currency that the portfolio is in. $48 apparently in here in dividend income, that's slightly not correct, and 1.65 in capital gain. Not including the holdings, the sales, in the last 6 months, which has been quite good. I think is about 600 quid. Let's have to get this up. Nearly 687 quid in the last 6 months. So moving on to the goals for 2021, 3 simple ones. I would have 20k in equity. I want to have above 15% return. I don't want to go crazy and say, I'm going to get 40 or something, because you need to be realistic. I'd rather have steady, consistent growth than shoot for the stars and something that is just wild speculation. And I want to have less than 20 holdings, so I want to keep it as condensed as I can, just so you don't have 100 quid here, 100 quid there in different holdings. That GE, for example, I should have bought a lot more GE. They've got very good development in the wind. They do a lot of aircraft engines. I've got a 71% return on that, but I only put $200 in. So you can see here, it's just not. This is my mistake. I should have put more money in this, along with HSBC and Meggitt. I feel like they're both companies that should have required more capital to begin with. See here, with Meggitt, we've got just about a 50% return. And the final goal, which I didn't put, I just want to have fun still. I really enjoy reading about all the investments. I enjoy reading all the different reports and learning about it. So hopefully I can keep up this same enjoyment to get these returns. So thank you very much for watching, and have a good Christmas.